For the first time in 5 years, our real estate market in Durham Region during the month of May has passed 1,800 active listings, and at the same time, the Bank of Canada has just announced its first cut to the interest rate in 4 years. So it kind of feels like we're at a crossroads where we have a lot of inventory on the market while we're heading into a slower time of the year where we'll see inventory continue to grow, and with enough active inventory that could start putting downward pressure on prices again like we saw last year. But on the other hand, we now have this rate cut, and that tends to breathe some life into the market. So in this video, we're going to talk about where the market is right now and how it may play out over the summer. So if you're planning on buying or selling a home in the next 30, 60, or even 90 days, then this video is for you. If you're new here, my name is Jessie McLellan and I'm a realtor here in Oshawa, Ontario with the Lisa Abbott team. I make videos to keep you up to date on everything happening in the real estate market, especially in Durham Region and the surrounding areas. So if you want to stay in the loop when it comes to our local real estate market, then please subscribe to the channel and like this video to help me reach more people like you. You can also use the link in the description to book a call with me at a time that works best for you if you want to get your questions answered about our market or buying or selling a home here. First, I'm going to jump into a quick update on where our real estate market currently sits, and then I'll talk more about our interest rate announcement. If you want to skip this part, you can click the timeline below and jump ahead if you're just here for the interest rate talk. Looking at our market month over month, we continue to see growth in new listings and a decrease to our number of sales. And that's allowed our active inventory to be able to continue to grow. With a 21% increase in active listings, Durham Region now sits at 2.1 months of inventory. Still technically well within a seller's market, but trending towards a more balanced market. And that's reflected by our sales to new listing ratio, which has declined again for the 5th straight month. The lower the sales to new listing ratio, the cooler or more buyer-friendly the market is. So sitting at 43.6%, that tells us the market is trending towards a more balanced condition. The days on market and sale price to list price ratio remained the same, and our average sale price saw a small increase of 1.1%. Most of the areas in Durham Region experienced a similar month. Ajax and Whitby have the lowest inventory and are experiencing hotter markets than other parts of Durham Region, but that's really going to depend on what segment of the market you're looking at. For example, detached in Ajax is sitting a little above 1 month of inventory and selling extremely quickly compared to condo townhomes and condo apartments, which have a larger amount of inventory and are selling at a much slower pace. Everything under the $1.5 million price point in Whitby is still moving quickly, while homes above that price point tend to take almost twice as long to sell. Clarington saw the largest increase in new and active listings, but it also saw a 6% jump in average sale price. But take that price bump with a grain of salt, as we saw Clarington's average price drop from March to April, and I think this is more so the market just evening out rather than prices trending upward in that area. Condos in Clarington are selling much slower and have a lot of inventory built up. And if you look at the activity specifically in Clarington's condos, it's very much a buyer's market. And we're seeing those homes consistently sell below list price, and prices on those properties have dropped drastically over the last few months. If you're open to condo townhomes or apartments in Clarington, now is the time that I would start seriously looking, because there are going to be really great deals available. Oshawa looks very similar to Clarington. Large increases in new and active listings, a small decrease in sales, and everything is selling at about the same pace as Durham Region's average, with condos being the outlier and selling slower. Pickering has the highest inventory, but for the most part, every price range is selling at about the same pace, with 14 or 15 days being the average time it takes to sell a home. So for the most part, nothing is moving super slow, just with some of the higher price point homes and obviously the higher inventory. Homes selling above asking is happening a little bit less in Pickering than other areas. What really caught my eye this month was the increase in new and active listings. If we look back to last year's data, in May 2023, we had 1,650 new listings, and we ended that month with 1,015 active listings. That was just the beginning of our market starting to accumulate inventory, and we built up listings all the way until October when we peaked at 1,770 active listings. And our new listings also peaked at 1,727 in September. And compared to this year, we've already surpassed both of those numbers, and it's only May. I think it's fairly safe to assume that we're likely going to see inventory continue to build up from here until at least August or September, and that we've likely passed the peak in number of sales, which means we've also likely past the peak in prices we're going to see this year, and if not this month, then very likely in June. Now, I don't think this means we're falling into a true buyer's market where we have 5 months of inventory and we're experiencing heavy price declines month over month, but I don't think we need the market to get there to see any meaningful or noticeable change for buyers and sellers. And depending on what perspective you're looking at this from, whether you're a buyer or a seller, is going to influence whether you think this is a good thing or a bad thing. Last year, we peaked at 3 months of inventory in October, so I wouldn't be surprised if we get to that 3.5, maybe even 4 months of inventory at some point this year, given the current pace we're seeing listings coming onto the market. And if we do hit inventory levels in that range, that would be the most buyer-friendly and balanced market we've experienced in years, like I'm talking a decade or more. And I know if you're on the selling side, that might not be something you're excited to hear, but unless you're just cashing out of the market entirely, you're also going to be a buyer in this market as well. And it's going to be a much less stressful process for you. Because as much as it felt like the new normal, home selling in 10 days at 107% of list price with 10 firm offers on the table is not a normal market. A normal market is homes taking 20 to 30 days to sell. A normal market is having to actually negotiate and work with the other party to come to a fair agreement for everyone. A normal market is having time to view a home, get a home inspection, put in a financing condition, and think about it without feeling the pressure of needing to make a decision on the spot or risk being priced out of an area or home type completely. So I think over the next 30, 60, 90 days, given where we're at and where our inventory levels are trending towards, there are going to be some sellers and their agents who are going to have to adjust their approach and adjust their expectations. Don't get me wrong, the sky is not falling. Homes are still going to sell, and the ones that show like a 9 out of 10 or a 10 out of 10 and are priced correctly, they aren't going to have any trouble selling and selling fairly quickly. But sellers and agents who might be a little unrealistic with their price expectations, or the ones who struggle when it comes to pricing homes and the strategy to use, they could be in for a bit of a shock over the summer. And for buyers, even if we reach more favorable market conditions for you, and while it will be way less stressful than purchasing in an extremely hot and fast-paced market, you're going to face different frustrations. Instead of finding the perfect home and losing it because you didn't jump fast enough and offer a kidney to the seller, you may now find yourself finding the perfect property, but with an unrealistic seller who may take too long to come to terms with where their market value's at. Or finding a home that seems to have a good list price and is accepting offers anytime, only to hear back from the agent that they want 40 grand over asking, or worse, 40 grand over market value. Sellers who are going to be successful are going to need to play nice. With the market we are in and inventory building, many of the BS tactics that have been rewarded in hotter markets are not going to be rewarded because buyers don't need to buy that home. There are 5 others on the market just like it, and if they feel like sellers or agents are playing games, they're going to be more likely to walk away and explore a different opportunity. When the market shifts, not everyone adjusts as quickly as they should, and it can cause people to make questionable decisions. As a seller, you should not be taking less than fair market value, and that means knowing what's selling around you similar to your home and valuing accordingly. And as a buyer, you should absolutely be exploring your options, taking advantage of the additional options on the market, and trying to get the best deal for you. With that said, here is where we have a bit of a dilemma. With the Bank of Canada announcing a rate cut for the first time in 4 years, this could potentially change how this plays out. First, what I want to make clear is this rate cut did not make homes affordable overnight, and it's not going to bring a flood of buyers to drive up prices forever and ever. In reality, this mostly affected variable rate mortgage holders. If you're a buyer and you're looking at fixed rates, it really didn't change anything overnight because fixed rate mortgages aren't affected by the overnight rate like variable mortgages are. What they are affected by is Canadian bond yields, which we did see a small drop in, so down the line we might see fixed rates come down a little bit, but that hasn't happened quite yet. So this isn't all of a sudden flooding the market with buyers who woke up with a higher pre-approval and will now drive home prices up. And I also don't think it was enough of a cut to make a big enough difference to the homeowners who are truly struggling financially and on the edge of having to sell their home. What this might change though is people's mentality, and that can have almost just as big of an impact. We've been hearing for a long time now now that people are waiting for rates to drop. And while a 0.25% rate cut is not going to make someone who couldn't afford a home be able to afford one overnight, it could be the nudge some buyers need to feel more confident in the market and to feel like they're past the pain and past any more rate increases, and ultimately make them feel more comfortable starting their home search. With that said though, given this time of year, we're coming out of the spring market, we're heading into summer. This is usually when sales start to slow down a little bit, families are taking vacations, and inventory isn't at the crazy lows we've seen, and it's probably going to continue to grow. So personally, I don't think we're going to see any drastic change in the market. I think that buyers that might come into the market are likely going to replace the ones that are taking a step back for this summer. And even if we saw a small bump in prices, which we absolutely could, I think we're going to have the inventory available to handle it without that much of an effect. In fact, post-rate announcement, we've actually seen more inventory coming onto the market. I think the vast majority of those listings are homes that would have been coming onto the market anyway. You have to remember it takes about 2 weeks to get ready for the market, but the sellers or their agents decided to hold off until the day after the rate announcement, likely to try and take advantage of any additional buyer confidence. Now, if we see another cut in July or even September, then I could see it bringing a bit more life back into the market. But I still don't know if that's enough with where we're trending with inventory to cause any meaningful spike in home prices or in number of sales. It could just end up providing our fall market with a little bit more activity than we saw last year, where it felt really slow compared to years prior. That's my opinion, and I would love to hear yours. So please leave me a comment and let me know how you think the rate cuts will or maybe won't impact our real estate market. If you have any questions for me, book a call using the link in the description. I hope you found this video helpful. Thank you so much for watching until the end, and I'll see you in the next one. Bye!